Hello traders, hello warriors, hello eagles, hello brave-hearted people that take on a very difficult task, and anyone that's been doing it for a while knows that it's not as easy as it looks, and most of trading is in our heads, not in our charts, but it's our psychology and our emotions that challenge us most of all when trading the market. So I want to welcome all our viewers from investing.com. I have an excellent guest. William Keel actually has created a platform, trading platform. Mainly he did it for cryptocurrencies. So if you're a crypto trader, you may want to stick around for this. My mic is off. Oh boy.
How about now? There was a problem with my headset.
Perfect.
Thank you, buddy. All right, so I want to welcome all you warriors. Okay, thank you, guys. My headset popped out of the side of my laptop. And all you traders and brave people that have the courage to undertake a challenging profession, which is trading. Anyone who's been doing it for a while knows that trading is all in your head and my head, not in our charts. It's the controlling of emotions, which is the biggest paradigm shift that people have to make. You know, there's all these things that people go through, first daylight syndrome, where the market moves their way quickly, they get out, and then the market continues to head towards objectives. There's all kinds of patience. There's patience about when to get in, and the waiting's the hardest part, to wait for good, high quality setups. But you also need the patience while you're managing the trade. So I appreciate the courage that people have to undertake this endeavor. I've been doing it for a little while myself. And I want to welcome all our viewers from investing.com. Thank you. We have a great guest for us today. I have William Keel, who actually created a trading platform, mainly for crypto traders, because there's no centralized place to trade everything. So it's going to be interesting to talk to a creator and, you know, ask the big questions like, are people's funds safe? Where are they domiciled? Like Trent. And while I bring up Trent, anyone who is thinking that they could get better service with their broker, you want to call Trent at Forest Park. And if you're overseas, he'll set you up so that your trading along the way is going to pay for your subscription to be with the dream team. Okay. And, you know, I know people laugh when I say it, but this is the dream team. And all talented analysts and traders. And I've been around and I've never seen more talent in one place collaborating together using different methodologies in my entire career, except maybe on the floor of the exchange, where traders did rub elbows and worked with each other. Of course, there were also adversarial relationships in the pit, and you might take an elbow. So I am showing the screen. I'm showing our team. So let me get back to the markets here. Everyone see my XAU chart, the gold up here? Give me a Y if you could see it. Okay, thank you, Tom. All right, so, you know, I do want to cover equities, but I know a lot of people are starting to get very excited about gold, and targets are starting to be raised, but I just want to point out that when we were down here, 1240, 1250 looked like, you know, a gargantuan task for gold to achieve. We liked it in here, But now we're getting, if you are a long-term bear and believe in this trend, that it's going to continue, and this low, this panic low that happened in Asia at 1160 isn't going to hold. We're now getting into areas where the bears, and there are plenty of them, everyone's still pointing towards the commitment of traders report, which was very, very extreme, continues to become even more extreme as shorts were added by commercials. On this rally, you really never had liquidation of shorts, so these guys are being pretty stubborn. They have pretty deep pockets. So shorter term, I'm starting to look at, reason short term to short it. Here's your first non-confirmation. We haven't seen for a while. I've had guests on that we're talking about potential targets in the mid 1240s. Here you go. This is a confirmed high as well. So perhaps we hold here. It's really fought a strong dollar, I think, brilliantly, the precious metals. In fact, silver's looking a little better here. Maybe it's the final stages. But if gold holds here and we get one more high into the mid 1240s, I'm going to start looking for shorting opportunities, but I just wanted to give you a little macro on the gold. Okay, as exciting, if I told you what was going to happen, and we did tell you that NASDAQ could drop from 7,400 to 69. I mean, it was 800. It was 77 to 69. And this is all gold would do, didn't do this. So be careful about your enthusiasm. I know a lot of cycle guys are looking for low, the end of the bear market in gold to be taking place near year end, early next year. So I just wanted to put out, someone can't see the graph. Okay, put that out. But I do want to go, since we're on investing.com, to the indices.
Dale?
Yeah.
Hey, I hate to break your bubble, but it is only Wednesday. Your work week just got a day longer. Just letting you know.
All right, well.
That sucks. It sucks when that happens, I know.
Oh, wow. I tell you, Blake.
Sorry. I'm sorry. Hate to burst your bubble, buddy. It's Wednesday. It's Wednesday. Investing.com day is tomorrow.
Okay, so it's like
you were thinking the Friday was tomorrow.
I thought I was on an hourly chart, and it was really only a 5-minute.
That's correct.
Okay, thank you so much.
Yep.
See, what a great team. What a great team. You guys know I've been through a lot. I'm a battle-scarred veteran, and it's great to have people remind you what day it is. All right. Hey, anyway, that's phenomenal. So, Blake, thank you for being kind to senior citizens. I appreciate it, buddy. All right. Well, anyway, I'll, the big thing yesterday, before I turn it over to Blake, who, I was almost like Kim about 30 years ago. I think he had it together more than me back when I was his age, definitely. Anyway, the big event yesterday was the S&P stuck out this low. NASDAQ did not, okay? You actually have a higher low here. So this is just a best guess, and I know I'll do something if it happens. And too bad for the investing.com people, because, well, I could talk about this tomorrow too, that if we start getting through 7150 here, very good chance, and you have massive earnings out this week. You have Amazon, which I think can rally to maybe 1880, 1900. I'll show you that briefly. But if we get through 7150, it's very possible. Equality exactly. This was 890. I think it was, 470. This wave here. So equality from yesterday's low, 470. gives you 7,400, huh? Isn't it? And then you have the moving average and 61.8 up here. You know, it could go there and then, you know, hesitate and then break out, but this is an opportunity, I think. And if you thought this wave was a very steep roller coaster, it used to be a roller coaster in Chicago called the Bobs, and it went 90 miles an hour, and that was the fastest roller coaster in the world. I think it was back in the World's Fair in Chicago in 1917. Anyway, I just wanted to alert you to this potentially happening here, and even the S&Ps at this low. Look at this RSI. Yeah, diverge real nicely. So I don't know. Why can't we get back and, you know, clean out the bears one more time before we head down? Maybe there's going to be some hope into the election. There is talk that the Democrats have already screwed up their blue wave, and there's an undertow. These are words that the media is using. But, you know, I would sell a rally into the election, or if it happens before I do it. So the price is more important to me than the event, but maybe there's a chance that the Republicans hold the House. We'll see. I think the market would like that. So that's it, buddy. Happy Wednesday to you, Blake.
Hey, Coach.
Hey, buddy.
Yeah, so I was, when you said it the first time, I was like, man, I'm not going to bust his bubble yet. I'm going to let him continue on. And then you said it again. I'm like, man, I guess I better say something. I'm doing okay. I just got it stopped out of my gold long, so I'm a little irritated about that.
But good discipline, Blake. You know, I mean,
you know, it's
why? Because you didn't take it at the top. Is that why? I mean, you still get those woulda, coulda, shouldas every day.
No, it was well, I shouldn't have you mean take profits yesterday when it was trading higher. Yeah, I mean, yes and no. I mean, when it, or I'll take over the charts here. When we moved to when we closed below, here we go. We closed below the breakout point.
I see.
It was right here. When we closed below that yesterday, I was thinking, man, I should probably pull this off. But, you know, I was still trying to let the flag play out. And as you can see, we broke back below the flag breakout point, which.
Oh, and you have a fib I didn't see up there.
The 38%.
Yeah.
Yeah, I mean, that's a 38. Why it's so big is because there's a 38% retracement and previous support.
Great picture.
Yeah, well, unfortunately, it held.
You know, I'll tell you something. You know, I can look at a chart and see things, but when I look at your charts, I see even more. Really, man.
Well, that's the point, right? Of using you know, ForexAnalytix is having, you know, different viewpoints of charts that you're staring at. You know, it's like,
yours are great, Blake, is what I'm saying. It's a really, I may have had a thought on an area, and you always seem to, like, you know, end up having evidence at that area that I didn't even see.
Well, yeah, again, and that thank you. I think that's the important thing of, you know, having different views of different charts, and you can go, oh, and there's an explanation on why, you know, a chart looks a certain way and why we're looking at it, you know, to go certain levels. So thanks, you know, and I'll tell you, one of the reasons why gold is so weak is we've had a really big rally in the dollar index, and you can see,
man, it's relentless.
Yeah, it's busting out of its triangle to the upside, and you know, if you're short the dollar, that's pretty scary. We are testing 127% extension right now, so I don't know if this is the right optimum place for you to be on the long side at this moment. You know,
we're going for those highs, aren't we, Blake? Well, regardless if there's pullbacks, it looks like we're going for those August, September highs at 97.
I think so. Or I think so. I think that's where we're going. And ultimately, the dollar is, you know, being, you know, well, we have a few things. So let's talk about what we're seeing in you know, the majors specifically. So the euro dollar is breaking a bearish wedge, and if you didn't know this was a bearish wedge, Here's the euro dollar. Yesterday's analysis. We are in the middle of a bearish edge. I meant to say wedge. That is developing. Not much else has changed, and you know, we were just sitting in this this bearish wedge. So if you guys don't know how to read a bearish wedge, it's lower highs, consistent lows. You know, eventually the higher probability is that it breaks lower. Just because it's a bearish wedge doesn't mean it breaks lower. It just, you know, there's a, I would say if I had to throw a number on it, there's probably a 65-70% chance it breaks lower, 30-35% chance it breaks higher. So bearish wedge typically will break lower, hence the name bearish wedge. But you know, obviously today we are breaking down, and you know, and I've said that, you know, we break 114.30 and chances are we see 113 pretty quickly, and we are making our way down there. Now, the other thing that you got to notice here about the 4-hour chart in the euro, it's a confirming move too. You can see the break here. There's a low in RSI. We're breaking lower in RSI. So we are at 127% extension. So again, shorting it right now, I don't know if it makes a lot of sense. I think that if I was going to short the euro, which I'm not short the euro right now, but oops, that's I would probably look to sell a bounce back above 114. That's what I would look for currently, instead of trying to short it here per se. But I think that the euro is on its way towards 113 now, and so you got to just plan accordingly. Now, one of the positions that I'm looking at, and I haven't confirmed this with Andre, and I probably should, is that I'm looking at the cable to get to 128.30, and I'm really looking forward to us getting down there. Now, there's a couple reasons why, and this is why I'm going to take a pop shot at it. And I may be wrong. I mean, you know, I'm not always right. You can see in my gold trade today, it's not always right, but it's a good risk reward for me. Is going to be a long cable trade right around the 128 level. 128.30 is the 127% extension, and of this last move higher, and we broke lower below, you know, 129.25. So I think we're making our way down there. I'd like to see us, you know, make our way down towards this 128 level. There's so much support down here. Amanda also pointed out in the chat room that if you take this low to high, the 78% retracement comes in at 178. So a lot of support down here. You know, you could wait for 128. I'm going to try to get in a little bit before that if we can make our way down there. So that, you know, that's what I'm looking at with the cable. It definitely is not acting well, and I think that you know, for bulls anyway, and I think that we can make our way down there. I'm looking for a retest of this trend line. 127% extension, 78% retracement, Gartley pattern move, you know, 88%. I think that's a Gartley, but again, harmonics are not my forte, if you will. And I was looking at Andre's charts a little bit earlier, and I was looking at his weekly charts that target a little bit lower than that. So so anyway, that's what I'm looking at with the cable. With the Aussie, you know, we're just very much in a downtrend, but we're not moving lower at the moment with the Aussie, as the commodity currencies are stuck. I mean, the Kiwi's stuck, the Aussie's stuck, the Canadian's stuck, and the Canadian rightfully so. We'll talk about that here in a second because of the Bank of Canada here in a few moments. But the Aussie's just kind of stuck in this downtrend. And you know, when you saw the price action in the stock market yesterday, it's not surprising to me at this moment in time, and it shouldn't be surprising to you. The commodity currencies are outperforming. All right. And the reason why I say that is because just because the stock market was down yesterday, okay, and by the way, we did touch major support yesterday. The fact of the matter is we bounced pretty aggressively at the end of the day. Now, if risk appetite is going to be a little stronger, typically the commodity currencies are going to act a little bit better. So you can see the euro breaking down, the pound breaking down, but the Aussie and the Kiwi and the Canadian are just kind of staying put. That's typical when there's more risk appetite in the market and less risk aversion. So again, it doesn't really surprise me that the Aussie and the Kiwi are outperforming the euro and the pound, just from a correlation standpoint. Now, the euro is also down. Keep in mind, because of the weak PMI data overnight. If you didn't see, the German manufacturing data is coming out weak. Eurozone flash manufacturing services PMIs all are weaker. The French services PMI came in better than expected, but everything else was pretty much a miss. And that is, in my opinion, is where the trade wars, starting to bite a little bit, and you're seeing a little retraction in PMIs. Now, all of these PMIs are still in expansion territory. Below 50, you start to get in contraction. So we're still expanding. We're just we're coming in, less than expected, and that's a risk. That's a risk right now for the Eurozone economy, is the PMI data is actually starting to slow down. So if you look at, let's take a look at German manufacturing PMI, and let me just grab my pen really quick. You guys know how to read charts, all right? We're getting a little scary area where PMIs could dip going in, and later this year, or into next year,
especially if they're not lying to us and they're saying they're going to start quantitative tightening in the Eurozone with these numbers already declining, Blake, don't you think?
Yeah, and then on top of that, throw in tariffs.
Yeah.
Excuse me, I didn't mean to yawn on you guys, but throw in a trade war with the United States, and that's what you got. You're going to get some PMIs that start to slip into negative territory.
I've read some things from some pretty famous market scholars who always believe that this time the crisis, like it started here in 2008, it starts in Europe. It's like a domino. It goes from Europe to Asia, then finally lands on our shores. They're looking, I think Martin Armstrong, that starts in Europe, moves to Asia, and then the U.S. finally catches up with us. The rest of the world drags us down this time.
Well, I think that's entirely possible. I think that's entirely possible regarding growth globally. So
yeah.
And we can sit here and tout our horns that the U.S. economy is doing great, but it is going to catch up with us, and eventually at some point. But right now, the focus is on the euro, and even if things do progressively get worse here in the U.S., will investors turn towards the dollar for as a safe haven bid, which is entirely possible. One thing I want to talk about before the guys get here is we have the Bank of Canada today. Now, this is the U.S. dollar Canadian, and as you guys, I bought some overnight at 130.72, and I picked up a little bit more this morning. I have a long averaging at 130.74 right now. So the reason why you might be asking why I'm buying the dollar Canadian is a couple of reasons. First of all, technically, you can see that we have a big inverted head and shoulder pattern. All we're doing is testing the neckline. We have a big channel that's holding us hostage, but and also I have to mention this, that relative strength has completely worked off our overbought signals and divergence. So now we're basically neutral on relative strength, at least on an intraday basis. Now, one of the things that I think the Canadian has going against it is its very aggressive market expectations of 3 more rate hikes, baked in the cake, if you will. And what you've seen is the dollar Canadian rally substantially. I mean, we've had following the NAFTA. I hate using the USMCA acronym because it just doesn't make. I don't like the acronym, so I'm not going to use it. So there. We've had a 2% rally in the. I'm a Marine, so we're USMCA.
You could say why you're a proud Marine.
I am, and USMCA just doesn't ring a bell with me. Anyway, so we've had just roughly a 2% rally since the new NAFTA agreement has been put in place, which has stunned the market. I mean, it doesn't matter who you talk to. Everybody's like, well, the Canadian dollar should be going up because the Bank of Canada is going to start raising rates again, and they're going to be more hawkish. And how about if they're dovish today? We haven't heard from the Bank of Canada, right? With their statement following a rate hike. So, will we even get a rate hike today? How about if the Bank of Canada holds? And they're hawkish, but they hold. I mean, the dollar Canadian will be trading above 132 today, in my opinion, if they held. But even if they come in and they say, okay, we're going to hike rates, but we've got to see, we're concerned about global growth, and inflation came in weak, and retail sales, and then they start worrying about the housing, market in Canada, and who knows? How about if they come in a little bit dovish? Next thing you know, you're going to have the dollar Canadian trading up, out of this channel. And my opinion is if we break 131.30, the dollar Canadian is going to go much higher. And so, and the flip side to that is if the Bank of Canada comes in with a hike and they're extremely hawkish, we could break down, and then I know where I'm wrong. That's the good news, is I know where I'm wrong. But when I think about how people's mindsets are, where we're at in price, it suggests that we are going to move higher. But like I said, that doesn't necessarily make me right. Dang it, I gotta refresh that. That doesn't make me right. It just it's something that I'm trying to play into, and like I said, we've worked off all these overbought conditions. So now we've consolidated in price. We are free to move higher if we move higher in the dollar Canadian. And like I said, I'm long. Now I'm not long a huge amount. I've established a small position. So in the event that we do move higher and I start buying on a breakout higher, I'll have a better cost average. So if I have to explain that to you guys, I will. If I have a small position here and it breaks out and I end up getting long more, that means that when I add to my position up here, my cost average will be somewhere around here. I can then move my stop up to break even on a breakout. And then if we break out, and then I have a free ride higher. So that's why I established. I've been planning on doing that the last couple of days, and during the World Series last night, I picked up a little bit of dollar Canadian. So, and again, I've got a little bit of a long right here, and if I'm wrong pretty cheap. So, we as traders, there are things that we can control, and what we can control is our entries and our risk reward. We can't control price. We can't tell the future. As much as you believe, especially after having a good run of making money over the course of the last, a couple trades or a couple weeks or a couple months, as much as you think you can predict what's going to happen, you can't. Only thing we can do as traders, control wise, is control where we enter the market and our risk reward. So, you know, at this point in time, I have a theme that I'm trading on. I know where I'm wrong, and I know if I'm wrong cheap, and if I'm right, I know exactly how to play it out, and I know how to control. I know how to control my risk on a breakout higher, so I'm not necessarily chasing the market. And that's the key, is having a plan as you navigate through this tumultuous market. I got one last thing I'm going to pass over to Steve and Stelios. I got an email from
mentoring, Blake. Very good mentoring.
Thanks. I got an email from the guys in the office, from Mr. Gellos himself, and there was a note that came from Citi this morning about how light the volumes are in the FX market right now, how thin the liquidity is, and it's very difficult to navigate through the markets. And so if you're finding it challenging, and I'll tell you, I'm making money this month. I'm not making a lot of money, but I'm making money, and it's a shame because October months, October, November, these are my good months. These are the December. These are the months that I really make hay because the sun is shining. We got all the participants in there, a lot of volatility. I tend to do really, really well these months. I'm not doing that well this month. I'm making money, but not the. I was looking at, you know, my numbers. They should be, you know, 3 times higher than they are right now, and I got this email this morning. It said, you know, that they just noted the volumes are extremely light, and price action is extremely choppy, and you guys have heard my analysis, you know, on the week ahead videos the last month. This has been right here. I mean, we've had head and shoulder pattern failure, inverted head and shoulder pattern failure, you know, it's so choppy out there. It is really hard to navigate. So don't get down on yourself, guys. It is really, it is a tough market to trade around. So like I said, I'm a little bummed out because this is the month that I should be making a killing. Like, these are the, you know, if I look back at probably like my best months, one of them are, you know, going back, you know, 25 years, my best months are probably October would rank up in the number 1 or 2. And right now it's
not over yet.
It isn't over, and it definitely my month could turn negative too. And that I don't want to rule out either. But I'm just saying that my productivity this month it's piss poor in comparison to what I'm used to. So, and I point that out just so you guys, you know, and if you're having a great month and you're just crushing it, congratulations. I'm very, very happy for you. You know, but if you're not, and you're like, man, I'm just, you know, I can't figure out heads or tails, don't beat yourself up. It is a tough market, and it's not easy this year. So I thought this volatility would bring a lot better productivity, but the volatility has just brought a lot of, you know, failed breakouts, and you know,
Blake, also for us, just like last night, these moves are taking place in Europe before we get up.
A lot of it's actually it's a lot of it's happening in Asia too.
Really?
So,
okay. Yeah.
There's a lot of, North America has been really choppy. I think there's a lot of push and pull, different directions. So, I forgot one last thing before I go.
Forest Park?
No. One last thing with the charts, but I'll let Steve talk about Forest Park FX. We did challenge the trend line and the 618 yesterday. You guys know that we were talking about this support right here. Yeah. At 2686. The low yesterday was 2691. I mean, that you know,
clean it up.
There's a, you know, close works.
5 handles.
Yeah,
Come on,
I mean,
man.
after and we had a 50-point bounce after we tested those levels. Yeah. So, and that's also the 200. That, well, actually, we're below the 200-day moving average. It's just a trend line and 618 and horizontal support. That is, I'm going to tell you guys right now, that is the line in the sand for the S&P. Period. End of story. No ifs, ands, or buts about it. All right, guys. Steve, good morning.
Steve,
Steves.
Good morning.
One of
morning.
them.
Morning.
There they are, the Steves.
All right. Well, I'm going to pass it over to you guys. Make sure you talk a little bit about Forest Park FX. I hope you guys have a great session. I got to get off to the markets here. I got to go.
Go ahead, buddy. Kill
right.
them.
See you guys.
Blake,
Yes.
just a fast word. I'm 100% with you with having to do with the USD CAD. We had an extensive conversation yesterday afternoon in the chat room. I was saying the same thing. Just if you look at my chart, this is USD CAD in blue overlaid with USD NOK. I think there is a lot of dynamic energy built into USD CAD because USD CAD didn't want to follow either USD strength or crude weakness just because the BOC was upcoming. So I also believe that even if BOC delivers a neutral or even better a dovish hike, there is a very high chance of a break higher. So I'm 100% with you. That's the discussion we were having with Joe and some other people in the chat room yesterday. So I just wanted to say that as well. And you can see here the divergence between two currencies that are historically correlated with crude, right?
Great. Yes. Yes. Thank you.
So have a wonderful day, mate.
Thanks. You too. All right. Talk to you guys later. Bye-bye.
All right, see you, Blake. Steve, how are you?
Hey, coach. I'm good. How have you been?
Good. What do you make out of the reversal in NASDAQ and the indexes yesterday? You think that we could have some follow through and there'd be an opportunity like NASDAQ? To me, I'm not an Elliotician, looks like we could get a C wave with a quality taking it to 61.8, 7,400.
Listen, if you remember, I was saying that I expect at least one more low, and I stressed out, as Blake just did, and he did so yesterday as well, the importance of this confluence. Actually, yesterday in the chat room,
NASDAQ didn't make a new low.
yeah, we'll talk about it.
Oh, okay.
First of all, for me, I've said it a billion times. The S&P is the benchmark for risk. So having to do with assigning weight on indexes, I will always look first for the S&P. Okay. So yesterday, as you know, I had a 1/3 of a position short. Yesterday, I actually closed that short literally at the bottom. I mean, I think I closed it like at 26.92, 93, something like that. I wrote it in the chat room. I said that what the heck? I mean, you know, I'm 120 handles in the money. I wish to have a bigger position, but you know, I don't want to be short right at this support area. What I did not do, which in my opinion I should have done, but I can tell you as a fact that one of our most active traders in the chat room, did, is actually I should have actually reversed that position, just 1/3 of a position. So I should have closed that 1/3 and buy a little bit down there, which I didn't do. And I regret it because I strongly thought about it, but you know, I've already had like a very good month. So sometimes, in my opinion, that's a mistake because you shouldn't be basing your trading decisions on what you have done so far. I mean, you know, you can make a great month even greater, or you can make a bad month even worse, right? You know, but you know, it crossed my mind like, okay, you know, you shouldn't be pushing your luck. This has already been an amazing month. Already made, you know, money twice being short the S&P. Yesterday, I actually closed also my crude almost at the lows for the same reason. The same reason being that we hit strong support. I'm going to show it to you later. So I was like, nah, you know, just don't push your luck. But I think it was a good short-term long to be there. On the other hand, I have to say something which is important though. I was writing yesterday in the chat room, since before we actually planned to the lows, that 27.45 is a key level because that's actually the level under which the bulls, the bears remain in control. So we held that on a daily close yesterday. So in a sense, despite having a very, very big lower week yesterday, which made yesterday's candle more of a bullish one, on the other hand, at least the bears managed to, you know, to hold that line in the sand on the daily close. So far today, we're seeing, when the US market woke up, we're seeing another attempt to buy it. Personally, I wouldn't be at all surprised what can happen from here. First of all, do I believe that the move lower is done? Answer, no. But do I believe that from here we can either spend more time consolidating or even push to a new high, as I was expecting that might have happened earlier, and then lower? The answer is yes. So I would not be short here. I can tell you one thing for sure. I would not be short here. So, because we might see a bigger bounce or some choppy trading before something more happens in the direction of the downside. Of course, it's important. Yeah. Now, having to do with the Nasdaq, you pointed at the divergence that the Nasdaq has given us. Sometimes these kind of divergences are also a signal, are also a sign that we might get like a bigger rebound. So, for example, this divergence might play out. For example, I expect that the Nasdaq is going to share the same fate, which means that it will probably have one leg lower, but it might do it also from higher. And the fact that we saw this divergence yesterday is another indication that probably in the short term, it's a little bit dangerous being short, right? So,
but up there, Steve, you have equality with the first bounce, and then confluence of 61.8 and the 200,
and the previous lows, here.
Oh yeah, see, something else.
Yeah,
okay.
So quite a lot. I mean, let me also draw this here. You can see it here as well. There it is.
Okay.
Right.
Yeah.
So quite a nice bounce target. I mean, I would love to see the Nasdaq up there. Yeah, I can tell you, I would be sorting it both hands, right? No questions asked, because the risk reward makes sense, and that's all I care about, right? So if I saw a bounce up there, keep also in mind this is the 50 daily moving average, and as you see, obviously every single day it's moving lower, which also means that within a few days the 50 DMA is also going to be confluencing with everything else in here, right? So quite a nice area there around 7,400. So I think quite an appealing area to be looking for. Yesterday, the IWM, as the S&P did post a new low. It didn't hold it, as the S&P didn't hold its own. But what it did hold is, once again, this broken symmetrical triangles resistance as support. So the Dow also has a potential of, a rebound from here before lower. Okay. So, keep that in mind, which means in general that, there is a decent possibility and a decent opportunity perhaps for some relief rallies before we see lower prices. Now, since I showed this to point to the divergence with USD CAD, and I don't have more to add with the USD CAD, people that were in the chat room yesterday, I was quite active yesterday in the chat room, so they already know what I discussed. I completely agree with Blake. My gut feeling tells me that there is a big chance that the USD CAD is going to be breaking to the upside. But on the other hand, I can't help noticing that the USD NOK is currently, after recovering in what does not look like an impulsive move to me, it's currently testing an area that's quite important. It's this previous low here. It's the 61.8. As you see, this rebound is also channeled so far. So having to do with the USD NOK, I think, and I know that at least one person in our chat room, Oliver, an active trader we have in our chat room, is currently shorting USD NOK. And as I told him, I think that the risk reward is extremely appealing here. So this is something I wanted to also show, because we haven't seen USD NOK in a few days. So why not, visit it since we were talking about that. Now, let's go to crude and why I closed yesterday the remaining position for something like 7.8% gain. And the reason you can see it here, I haven't changed anything in my chart, is because we actually reached this horizontal support resistance area at 66 and change. I actually wrote in the chat room that I'm going to close that at 66.45, 40 something when we actually entered the zone. And until I wrote that in the chat room and until I actually went to my platform to close it, I had even made another like 15 cents to the downside because it kept plunging. So I ended up like closing it at 66.30, 32, something like that. It ended up pushing even lower than that, even below 66. Today it seems to be rebounding. That was a huge move down yesterday. So there is a decent chance that there's more downside coming towards 64. But to be honest, I don't want to be greedy. I was short from 71.90. I took partial profits, 3 times until I completely went out of my position yesterday. So, I'm very happy with this trade, and I'm not looking to be short anymore. Even if it wants to go down to 64, I don't want to push my luck. I think that was more than satisfactory. But as I said, yesterday's candle is very bearish. So, we might obviously see some kind of a small rebound, but there is still a very high chance that we're going to see lower prices with the 64 area being the next area of interest to the downside. Now, I have nothing to add having to do with the Aussie and the Kiwi. As Blake mentioned, both of them, you can see Aussie here and Kiwi here. So both of them, you can see 2 things about them. 1, they remain within their bearish channels, but 2, there is an obvious loss of the downside momentum, right? So they remain bearish because as long as they, keep holding within the descending channel, after such a long period of time, and since they haven't violated the most basic rule of a downtrend, which is like lower highs, there is nobody that can advocate that, okay, this is the time to buy them. But, the loss of bearish momentum is more than obvious. So I would be quite careful here, and I would definitely not rule out an attempt of a bigger rebound. So, that's the only thing I have to say. And the reason, the reason that we're seeing the euro and pound crosses against them underperforming so much is the fact that the euro and the pound are obviously plunging, while more or less they're doing nothing. Now, let's go to these crosses because I think that they're at interesting junctures. The euro Aussie could be in a bullish pennant, in a bullish wedge, in a bullish flat top triangle, you can call it. So you can either call it a flat top triangle or a bullish wedge. It's the same thing in essence. But that's all is going to be violated if we actually close on a daily basis below this ascending trend line support. So be a little bit careful here because there is still the potential for a bullish interpretation, and even if we break below it, there will be other potential for bullish interpretations because let's be honest, I mean, there are several possibilities in a corrective move, but definitely I'm watching very closely this ascending trend line, and if we break below it, that's definitely not a good signal. Euros seems quite heavy, but the move lower does not feel impulsive yet. So you know how corrections are. They can be complex. They can be frustrating. That's why I try to avoid getting so much engaged with them unless they have some very clear characteristics. So, for example, sometimes you get a very clear corrective move that has, like, let's say, one leg, then it has like a clear pennant. This is how I initially got involved with crude, for example, and that's how I entered USD yen, which for now it's not working. Yesterday. And then you see a clear short-term correction, short-term like technical formation, and you're like, okay, even if it's a correction, it has one more leg left to go. So in the same manner, Euro Kiwi, first of all, has finally broken below this ascending trend line, which is important because this ascending trend line has acted numerous times. I mean, many, many, many times as a resistance. It even acted once as support, and it's now threatening to also break from this horizontal support area. So I have to say that the move lower in the euro kiwi seems to be quite mature in the short term, but it looks to me like a 5-leg move of some kind. So perhaps there is a little bit more downside, and then we might have a little bit more of an upside. So euro kiwi looks more clear to me, because even if this is a correction, I don't know. I have the feeling that it's going to have more to go. Probably the euros is going to mirror that as well. One of the reasons why I feel good still by holding the Aussie Kiwi in the short side is the fact that, for example, just comparing Euro Kiwi and Euro Aussie, Euro Kiwi looks more bearish to me, which means that Kiwi looks more strong than Aussie to me. So, and speaking of that, Aussie Kiwi is now retesting like the breakdown area. So I still like that trade to the downside. I forgot to mention it before. So let's have a look at the equivalent pound crosses. And speaking of which, I remind you, I said that several times. I kept warning that anything between 130 and 133 is purely noise, and as long as we don't clear above 133, the chances that this move higher is corrective are very high, and the chances that we're eventually going to break below this expanding triangle are also high, in which case, we might easily end up, trading to new lows even towards 126. So, I know that Blake showed a potential bullish harmonic pattern before, and yeah, sure, it might play out, but for me, things are quite clear. As long as we remain below 130, there is a big chance that the cable is going to fail spectacularly from here. So, it is what it is, and I'm not currently trading it because there are better opportunities out there, and I have been trading, the cleaner setups out there, and I've had a fantastic month so far. But that's what I'm monitoring. In general, the popular pairs recently have been more annoying, in my opinion, than anything else. But I did issue, of course, an update early today when the euro was threatening this it was actually just breaking below this 114.40 area, and I said that if we lose this area, which we seem to be doing, that obviously opens the 113 area for a retest. And I think that's the case. I mean, this is going to be a bearish close, and 113 is going to be the next area of support, and below that, it's the 111.86, simply because that's the 61.8 of the move higher. Before I forget, Stelio, are you with us, mate?
I am indeed.
Sorry, bro. I forgot that you need to go a little bit earlier usually, and I just jumped into that. But we still have the time before you go. From a macro perspective, is there something you wanted to share with us?
Blake actually covered most of it. The only other thing, I mean, he talked about the Eurozone PMI and the German PMIs being weak. The only thing that I wanted to add is we had the Riksbank today, so the Swedish central bank, which left rates unchanged at -0.5%, but they were on the hawkish side. So they effectively implied that they're going to be hiking relatively soon. People are talking about February, maybe even December. Having said that, USD SEK
having said that, too bad that the USD SEK doesn't care at all, right?
Yeah. So it's similar.
Keep in mind, though. Keep in mind, though, now that we're looking at it, keep in mind that it's currently testing a confluence of resistances up here, so it might be worth, paying attention to that. But on the other hand, I have to say that this might also be some kind of a triangle. I mean, we had a move higher, so perhaps the USD SEK also would want to do something like this. So one more move higher before lower. So definitely an area to watch.
I think at this point, unless the Swedish central bank does something crazy, this pair is going to be driven by the dollar itself, and not.
It's going to be mostly what the dollar does. It's going to be following suit. I agree with you, Stelio. I agree with you.
But apart from that, we had nothing else. We had the story about the I know it's not currency related, but it's related to Saudi Arabia and oil, where apparently they found the remains of this journalist in the Saudi consul's garden. So this whole thing is getting out of hand now, and it's definitely affecting oil prices, because the Saudis are saying we're going to increase output or keep output at a very high level. This is their only weapon. Right?
As you understand, that's a trade-off. For example, Trump is cynical, and in some cases that's useful for a leader. I mean, as I've said, I am an objective observer, right? I'm not a Democrat, I'm not a Republican. I've said many things that I don't like about Trump, I mean, having to do with his policies or whatever. But I will also point out that I have no doubt in my mind that when this came out, Trump definitely called them and told them, listen, I can definitely benefit from a weaker crude. So if you want the US not to push, using this story more, because the rest of the world is ready to push more against Saudi Arabia, I want a trade-off. And what is that? I want lower oil prices. And why do I want lower oil prices? Simply put, because it's going to affect inflation, and it's going to give me more ammunition to try to persuade the Fed to be more dovish, right? Or to be less hawkish or whatever, which we know that he wants.
Yeah.
So
and low oil prices are good for global growth in general. High oil prices can bring the economy to a grinding halt. Yeah.
Of course, and definitely affect disproportionately lower and middle classes, and Trump supporters are also there. So yeah, I have no doubt that this is a trade-off that was required. So that's why I also said, that's one of the reasons I also shorted crude up there. I said that it's people initially saw the story in the completely opposite way, that this might actually create some extra bidding in crude. But it was more than obvious that if Saudis wanted to actually make their position easier, they had to play ball having to do with that. And we know that the Saudi Arabia has the capacity to affect oil prices on its own, right?
Yeah, of course, absolutely.
Anything else?
I had nothing else. No, that's about it, my friend.
Okay, great. So let's see if we have any questions that we haven't covered. Who do we have for an interview today, Dale? Although I shouldn't be asking that, because we should actually be looking at ForexAnalytix webinars, scheduled interviews. So today we have William Kell, right? President and co-founder of Coinage, a cloud-based cryptocurrency trading platform built for sophisticated traders with real-time access to pricing data, full-featured spot trading on many exchanges, and portfolio management aggregation tools. Okay, interesting.
Hi, buddy. Can you hear me,
So, yeah, now I can hear you, mate.
Okay, buddy. Have you wrapped it?
Yeah, I think we've covered quite a lot. So if your guest is here, yep, you can go ahead and start.
Yeah, William's here. Okay, everyone stand by for William Keel at Coinage. Looking forward to this conversation. William, I'm going to make you the presenter. So you could share a screen if you'd like, or just use the audio, completely up to you.
Hey, Dale, thanks so much. Can you hear me?
Yeah, there we are. Great to meet you, William.
All right. Likewise. Thanks so much for having me.
Yeah,
really excited to kind of expose our platform to a new audience. So this should be
fun. And FX traders, a lot have gravitated towards trading crypto. A lot do both. The bigger audience are the younger people. It's like I've said, William, that to me, a wallet is made out of leather. So there are a lot of guys, a lot of people like me that are trying to wrap our head around it. And I'd like to know a little bit about how you got here. What was your journey like that led you to develop a platform like this?
Sure, yeah. So I think we'll be able to learn a little bit from each other. I had really no prior Forex experience before kind of delving down this interesting path. So I come from humble beginnings. We're located here in Milwaukee, Wisconsin. My business partner and I, our childhood friends, we actually heard about Bitcoin early on, probably about 2010, 2011. At the time, it was trading at about $15, which is pretty unbelievable compared to where it's sitting now.
Yes. Early adopter. You were an early adopter.
We were indeed early adopters and unfortunately early sellers.
Yeah.
So we purchased in, I believe, at $15, and it shot up to around $250, and we thought we were geniuses. So subsequently, we went and sold. At the time, that was on Mt. Gox. I'm sure most of your listeners are familiar with that saga. But we kind of caught the bug. We investigated it more. We read the white paper. Really kind of started to understand, what's behind it, the decentralized nature of it, the trustless nature of it is really kind of what got us going. And we thought, hey, there's some money to be made here, but also it's, it seems like a kind of good-natured, at least at the time, industry to get into. So we started trading Bitcoin, along with a few of the altcoins at the time. So really there was Litecoin, Namecoin, Peercoin, all of these kind of small, still to this day, low cap cryptocurrencies. And there were a few exchanges out there, one of them very popular at the time, but has since been shut down, called Cryptsy. So we started, we both have backgrounds kind of as programmers, software developers, a little bit in web security. So we started actually arbitraging between Cryptsy and Mt. Gox and a few of the other exchanges, which kind of naturally evolved into our friends of ours wanting user accounts on the system. So we added user accounts, and before you know it, we added charts. And really now we're up to, I believe we have around 100,000 active users. We have a mobile platform, both on iOS and Android. But it really kind of grew organically. We didn't initially set out to build a platform for other users. It was really just for our own personal kind of exploration in the world of arbitrage.
Okay, so let me get personal with you. I believe that it's whenever you are trading something and you're placing your funds there, the lack of security at any of these exchanges makes me question the return of capital rather than the return on capital. So you're an intermediary. People just use your platform for trading. What do you do personally? Do you ever have that concern of fiduciary responsibility of unregulated exchanges?
Yeah, absolutely. It's kind of a huge concern, both for myself and our users. But we're really hoping that, first of all, insurance is now coming into the industry a little bit. That's a big thing. I believe Coinbase is now fully insured, Gemini, a few others. And we're just really hoping that regulation can kind of catch up to the market. I don't believe in complete regulation, but having something there to kind of safeguard the users is a big deal. And we're doing what we can.
How do you safeguard yourself, William? That's really the question.
Oh, okay, sure. I keep my funds on a Trezor. So that's a hardware device that you can kind of plug in via USB. You withdraw it, and the funds are stored basically on that cryptographically secure device. I still, to this day, and that's not changing. I don't keep funds out on exchanges. Weird things happen. I've been around this space for a long time. Any exchange at any moment can get hacked, can go down, can run away with your funds. So it's really still kind of the Wild West out there.
So you just make a deposit for a transaction, then pull it. And you
generally speaking, if I plan on making trades for the day or the few days, I will make a deposit and then I'll withdraw after I have gotten out. So I'm more kind of a buy and hold myself, to be perfectly honest with you. running the business. I don't have too much time to kind of day trade anymore.
Okay.
So it'll be, you know, oh, I'm looking to pick up some Dogecoin. I'll deposit on an exchange, and then I'll get out shortly thereafter. So,
all right. So
Coach,
I actually know. Yes.
Coach, if it's not a problem, and if I'm allowed to ask a question out of curiosity,
Yeah. Go ahead.
so you know, you seem to be quite troubled with safety issues yet, which makes sense. I mean, this is the prudent thing to do, and we've seen a lot of incidents. On the other hand, we know that cryptocurrencies has zero intrinsic value in the basic sense of intrinsic value, meaning if you have to buy it and hold it for the rest of your life, it has no value. I mean, its only value is that you can buy something with it, or hopefully exchange it with some fiat currency at some point in the future. And you also called for more regulation as something that is welcome, and I agree with you. I mean, for me, two things will be positive. One, volatility dropping, which at least in the big cryptocurrencies, Bitcoin and Ethereum that we cover, we've already seen that volatility going down from extremely nut levels to something more normal. But on the other hand,
there's no volatility lately, Steve. I mean, you know, something will happen for 10 minutes and then it's like an EKG of a guy in a coma, right? Don't you think, Bill? The Bitcoin chart looks like an EKG of someone with a coma right now, in a coma.
More or less, but the question is, since there's no intrinsic value, and many of the people that got attracted initially to the idea of cryptocurrencies are people that actually also like the idea, perhaps, of no regulation, no tracking down, etc. Regulation will actually bring more. I mean, will bring people out of anonymity in a much bigger sense. Isn't that going to be counterintuitive? Isn't this actually going to hurt the sector? And at the end, what is it going to be a benefit of having, let's say, a cryptocurrency in comparison of having gold stored somewhere? Because there are now, for example, companies that you can have physical gold stored there, and then they give you a credit card or whatever, and you can actually spend that gold. So what is the advantage that's left in cryptos?
Sure. So I guess that's kind of a two-part question.
I'm sorry, it was a long one. Yeah,
no problem. No problem.
Steve's been holding this back for about a year. So if anything, William, I want to thank you for letting Steve express his bullish view on crypto.
No problem. I'm used to it, and I do appreciate it, and it's great to talk with you guys about this. But you're correct, I think, in the regulation may be counterintuitive to growth in the space. However, you know, I view kind of the cryptocurrency itself, that being Bitcoin, you know, whichever Ethereum, whichever cryptocurrency you're speaking of, being separate from the markets themselves. So we could have regulation in the markets, but the actual currency or store of value, as you may disagree with me on, or the kind of tenets behind it, those are two separate things in my mind. So you can close all the markets down. You know, we could make it incredibly difficult for anyone to trade, requiring KYC, AML throughout the entire process. But that actual currency still has some value somewhere. And it's not just a United States issue. I mean, it's a global issue, so it's kind of a borderless currency. You know, you can send it from one place to another frictionlessly. So it's really difficult to say, but I do see, yes, definitely some collision there in the future as far as making it easier for folks to adopt with too much regulation that definitely could come together. And now the second half of the question is evading me already. I apologize.
Okay.
No, the second half of the question was, and what would be the benefit if now exchanges become regulated and everything else, and what would be the benefit
because it takes away the attractiveness, right?
In comparison to, for example, having there are several quite well-esteemed exchanges that you can actually have a physical gold, and they actually give you the ability, they give you like a debit card, and you can actually use your physical gold, which is stored somewhere, to actually transact with fiat
Sure. Okay.
money. So
Sure.
what would be, and at the end of the day, you know that no matter what, there is something physical behind it. So no matter what happens, there is going to be some leftover intrinsic value. So why would Bitcoin, because I've heard many point to the argument, especially, in the earlier times, like last year, that, it was very popular, like Bitcoin and the rest of the cryptocurrencies are like gold 2.0, it's gold revamped, it's new age gold, etc. But I still can't see, the comparative advantage. That's what I asked about.
Sure. Well, kind of in my view, really, you don't own gold unless you physically have that gold. You don't know if the company that you're, if you're trading an ETF or something like that, that company may be operating on a fractional reserve. You don't know if they're actually holding that gold that you own. It's different when you're, day trading something. If it's easy to get in and out and there's liquidity, but to claim that you actually physically own gold is sometimes a misnomer. Now, I don't know if that's 100% true all of the time, but I do know when I hold my cryptocurrency in my Trezor in the palm of my hand, I physically own that cryptocurrency. So that's really the differentiating factor, and it's kind of a matter of, do you trust the parties that you're trading with? Do you trust, the bank or the vault that supposedly has the gold in it that you're trading? And that really is kind of a paradigm.
What do you have to trust, William, to feel comfortable with that little UBS thing in your hand? What do you have to trust?
You just have to trust in math, and that's really all it is. It's
okay.
It's elliptic. Pardon me. Elliptic. I can't spit out the term right now. You guys are throwing me on the spot, but basically, you're trusting in math. You're not trusting in a third party. You are trusting that device, however, has not been tampered with. So there's always some trust in there. But the network is secure. The math that it is actually built on is secure. So.
Okay. All right. So anything else, Steve?
Oh, sorry for
no, I apologize. I wasn't.
All right. I'm just glad it was cathartic.
Yeah, it's a little early here in Milwaukee.
All right. So I know Milwaukee, William. I grew up in Chicago, and so we used to have to go over the Wisconsin border to have a beer sometimes before the laws changed. So.
Oh yeah, right.
Yeah. Why don't we get to perhaps what are some of the advantages of this platform that you created? Maybe you could just kind of give us a quick demo of the features of it. And there are other people. I happen to know someone who also is, developing their own digital trading platform. So, I mean, they're not clearing it. They're just people developing platforms. So what makes yours different?
Sure. So first and foremost, we've been around since 2014. So we've kind of been through the ups and downs of crypto. Our platform is secure. It's scalable. Hundreds of thousands of users have successfully used it. We've never had any compromise to any third-party API keys on the platform. Yeah. There are quite a few, we should say, up-and-coming platforms that first heard about crypto, in 2017 during the bull run, and now everybody's building their own platform. I definitely wish them the best. This is still the Wild West, so.
Well, yeah, I have to say, I have to say it is different than the world I came from, because 4 years in something in your business makes you a longtime veteran.
Right. Yeah, they always say a month in crypto is a year.
Instead of 10, 20 years, or doing something in the business, you're an old timer if you've been around 4 years.
It's sad to say, but it's true.
Yeah.
Yeah.
Okay.
But yeah, so we do have kind of a solid track record behind us, and that's really a big thing. If you'll search our company name online, there's not really many negative reviews and overwhelmingly positive reviews.
Well, I read something when I was scoping you out for the interview, is that a lot of people are afraid to use stops on some of these exchanges, and your software, your platform accepts them. Are they usually filled around the price?
Yeah, so I can get into that. So the way that our platform operates, so we're actually kind of like a third-party operator. You plug in your API keys from the exchange into Coinigy, and then you're able to kind of remote control your account through Coinigy. And that includes trading, placing stops, you name it. Basically, the way that our stop limit system works is that users can actually place a stop limit directly on our site, and we will hold it until we detect the target price on the exchange, and then we place the limit order directly on the exchange on your behalf. So with cryptocurrency, there's a ton of order spoofing going on. You're trying to outsmart the bots, and it's really kind of a democratic playing field, as in anybody can go out and write a trading bot for little to no expense. So keeping your order off of the exchange's books is very enticing for a lot of users. That's one of the big features that kind of the users of our platform and partake in. We also offer alerts, price alerts across, let's see, I think I had it pulled up here. So currently we're supporting 41 exchanges, 3,686 markets, and 3,500 currencies. And now this is completely cryptocurrency. Wow. Yeah. So we're entirely crypto focused. There are, kind of by proxy, there are Forex markets on the platform, as certain exchanges offer them. However, they're not as liquid as your typical broker would see.
Okay, but yeah, but you have crosses like Bitcoin and US dollars, Bitcoin and euros.
Yes, yeah.
Okay.
Yeah, we have just about every cross you could possibly imagine. So these are the exchanges down the left here. Just to give you kind of a quick idea, we were talking about gold earlier. We have an exchange actually called Vaultoro, and they actually will physically hold gold on your behalf. So it's very similar to kind of what I guess it was Stylianos was talking about earlier.
Yeah, but really, how do you know unless it's in a coffee can?
Right, exactly.
Just throwing your words back, buddy. All right,
right,
so,
yeah, right, exactly.
All right, so here's another one that you really don't own it, do you?
Right, exactly.
It's not in your hand.
Right.
And that I think that's one of the. I
think it's prudent to click on the gold ticker as I saw it show.
Yeah. I think that's one of the things that you like the most about crypto, is that it's in your hand.
Right. Yeah, definitely. I'm on page with that. So basically, kind of the platform at its core, we're a data aggregator. So we connect to all of these exchanges. We pull in the live trade data, live order books, and we then kind of bundle that up into a single format. And then we push it out to this user interface. As you guys can see, we have the TradingView charts. Everything that you see on the TradingView charts is actually fed through our backend. So all of this data comes directly from Coinigy. We're not using the TradingView widget. A lot of websites will just kind of use TradingView's widget and stick it in, but that's what allows us to have all these extra markets on here.
Okay, so let me ask you, what's the business model? Is it a subscription to use your platform? Yes. And do you arbitrage these trades? Are you involved in the spread of the transaction or commission per trade?
Great question. It's a flat $22 a month. We don't touch your trades. We don't really even pay attention to your trades. That's why you're paying us $22 a month. We don't take any VIG. We don't take any commission on anything. We're simply a connectivity platform. So you can sign up, you can plug in your API accounts into our terminal, and you can trade from our terminal. And that's really all there is to it. So when you're placing the trade, that cryptocurrency is never touching our servers. You're just remote controlling your exchange account through Coinigy. And just to give you a quick demo of that, I did want to just show you kind of what it's like to place a trade on Coinigy. It's very simple, except that go to webinar control panels in the way here. You can basically just go ahead and place trades directly on the chart. So if we want to go ahead and place a buy order for 0.002 BTC,
Yeah.
voila, your order is now placed on Bittrex.
Were you sure? I like the reminder. Are you sure?
Yeah.
I'll do it again. Should I? You know what? Are you sure?
Are you sure you want to
maybe
invest in crypto?
Maybe I should talk to my wife or accountant first, Mr.
Right.
Broker. All right, so nice platform. Congratulations on developing it, and it sounds clean. That you're just charging a subscription fee to use it, and you're not involved in the trade. So so basically, people are still, when they're trading or holding, say you buy a certain amount of cryptocurrency off your platform, they still have to go to the exchange to perhaps put it in their wallet.
Correct. As of right now,
Okay.
we do it that way.
Okay.
We're kind of waiting for the space to evolve a little bit before we start supporting withdrawals and that kind of thing. It's just a little bit risky. So we're going for safe and secure here.
Headaches.
Right. Exactly. There are now, we're talking with a lot of folks in the ecosystem right now. Kind of the new thing that we're waiting for somebody really to nail is a decentralized exchange. And that's going to allow you to basically connect, you'll have an application running on your computer, which is your wallet, and you'll be able to then withdraw directly from Coinigy to your wallet, or from the exchange to your wallet. It's a little daunting to kind of explain the decentralized ecosystem, but right now the issue is speed. Speed is really hard to replicate when you're trying to kind of spit that data out to everybody and make sure everyone's in consensus that a trade actually happened and that kind of thing. So we're waiting for someone to nail it, and we will definitely support features like that in the future. So.
Well, it was a pleasure meeting you. I really enjoyed it. And William, I wish you a lot of success and that your user base grows like a mushroom.
Hey, appreciate it. Thanks so much.
Yeah, and really good luck. And it's interesting. Yeah, you still have to bring the other world into it. And this is a different age we live in. In World War II, it took people trying to escape countries, gemstones to buy their way across the border. So who knows? This time it just could be a little UPS thing that's valuable. So anyway, I appreciate your views and standing up for what you believe in when you're challenged about the viability of this being an asset class. There are an awful lot of smart people that really believe in this. So I keep an open mind and wish you a lot of success and appreciate.
Great. Well, thank you so much, Dale. I did want to add one thing.
Oh yeah.
We also offer a data plan for $99 a month, and that'll let you get all your data into MT4 or Sierra Charts or any of the platforms that you're used to. If you don't like this UI, you can get all of our data in another platform. So.
Wow, you're there. All right, so the complete package, if you're interested in trading crypto and you don't like the platforms on some of these exchanges, here's another way for you to go. Okay, and it's at Coinigy, and your website is www.coinigy.com. Is that correct, William?
That's correct.
All right, well, I encourage people, if they want to trade crypto, to check this out as being a possible great resource for you. Thank you for your time.
Thank you so much. Appreciate it.
Yeah, it was a pleasure meeting you. Good luck.
Likewise.
Bye-bye.
Bye.
Okay, everyone. Oh, you're welcome, Tom. I'm glad. And that's a wrap. Now, tomorrow is Thursday. So I'll know the day tomorrow. I want to thank the whole team for everything they do every day. I don't know about you guys, but you know, I teach surround yourself with traders better than you. And I have more of an edge hanging out just in face with these guys. Can imagine what's happening inside of the chat room right now after I close space. You guys should be in there if you're taking this seriously. To be there for the good times, you have to be there all the time and make the sacrifice to be there for to exploit the markets. So above everything else, though, my friends, don't just count your pips, count your blessings. See everyone tomorrow. I have Jake Tilley lined up, Twitter handle @JustTrading. Adios. You're welcome. You're very welcome, guys and gals.